Hello everyone, welcome back. Another episode of Market Bites. I'm joined by Josh Gilbert all the way from Sydney, Australia. Josh, how are you?
I'm very well, Sam. I'm very well. How are you doing, my friend?
Yeah, good. I've been up early, been to the gym. I've started going to the gym at 6 a.m. and I feel like a new man. The problem is on the days that I don't go, my diet is horrendous. So I need to find some sort of balance there. It's up and down like the market, but all good. My end, can't complain too much. It's been very hot. For those in the UK, you'll know what I'm on about. Friday and Saturday were uncomfortable. When it's 30 degrees in the UK, and you'll know this from when you're here, Josh, it's a bit too much in the UK, isn't it? 30 degrees.
Yeah, I mean, I was having a conversation with a friend a few days ago, and I think it was 14 degrees in Sydney, and everyone was in jackets and was freezing. Like, if you put 14 degrees in England, everyone would be in tops off at the
Yeah,
beach.
yeah.
Do you know what I mean? I was also thinking as well, you said you're going to the gym early. I wonder if that will continue into the winter, mate. 6 a.m. gym starts.
No chance. I think one thing that's getting me there is I'm going with a mate, and I
Yeah.
don't want to let them down. So if they, but there's been one occasion where I got a message at 5:45 and like, look, didn't sleep last night. He's got a kid, sacking off the gym. I was like, yes. So I won't let him down, but he can let me down, and I'm okay with it. But yeah,
Yeah.
I think one thing that makes it easier as well is that it's just light in the morning, and everything's better when it's light in the morning. But you're right, when it gets to the winter and it's still dark at like 7 a.m. Yeah, no chance. No
Tough,
chance at all.
yeah, tough.
Yeah, my gym going is very seasonal. So yeah, I'd be long gym appearances from May to August, and then short for the remainder of the year. I think that would be
That's
a
a
pretty
great
good
trade.
trade. It'd be a
Yeah.
pretty good trade to do. Football season finished for you yet, or no, or still going?
No, still going so far. I've got a big game at the weekend. Top of the league, which is good. So far, so
Ooh,
good. So yeah, season will finish up around sort of late August time. So yeah,
nice.
so far, so good. So we'll see how we go.
Good. Safe hands. Right.
Mm.
Let's get all that chat out the way for our listeners. And we're going to discuss oil and LVMH, which I think are two pretty interesting topics. Well, oil has been interesting all year, hasn't it? But certainly LVMH as well at the moment, I think is something that's coming up on a lot of people's radars. But we'll start off with oil. And what I've found has been really cool recently is just how good a guide for sentiment it is. I literally wake up in the morning before I do the daily voice. I look at oil. If oil is down, I know equities is going to be up, and I know gold's going to be down. If oil is up, I know equities are going to be down, and I think, okay, well, there must be some sort of reason here. But it's been a really good guide for sentiment. I mean, when you look at oil, what are you making of everything at the moment?
I'm going to make that. There's been some terrible shouts, I would like to say, from market experts just out there.
Oh yeah.
So in Australia, right, we're quite lucky that we get a read on things pretty early coming through from at the weekend, right? So Monday, we kind of had the fallout from when oil futures opened. It was sort of like that first thing that sort of came through. We had that initial spike higher, and by the end of the day, it pared those gains and was basically flat, or even, I think we're even lower now than we were Monday. But honestly, some of the sort of the shouts I was reading, $120 from here.
Yeah.
I mean, look, there's absolutely the potential of that if we go into a full blown war and, the key oil routes get cut off. But I think it was a bit of an overreaction. I think what's a big takeaway from me is that this sort of uncertainty is quickly becoming a new normal for markets. Geopolitical tensions, Trump, tariffs, whatever that is. And I expected actually to see a relative sense of calm. And I think we got exactly that. I think for me, it was like, okay, unless we see tensions really keep rising and there was a lot more to come from this, which, to be clear, at the time, it definitely had the potential to do. I felt the markets were going to take it in its stride, and that's exactly what they did. And I felt that some of the commentary from some of the experts was a little bit over the top. It was like, okay, our job is to sort of try and keep that relative sense of calm. I know you're sort of looking forward to say, okay, this is what could happen if this could happen. The chances of that happening, I felt, were a little bit slim. So it felt like a bit of an overreaction. But we did have, obviously, the biggest sort of view of risk and how sentiment's going to fare is usually crypto, right? And Bitcoin fell below 100,000 on the Sunday and then was quickly back above that come Monday as well. We obviously had gold spiking as well. And so I think that, yes, we'll probably continue to see that flight of safety in those situations. But as I say, the sense of calm was sort of in. And I think oil will remain front and center through the next sort of couple of weeks. Obviously, we sort of on and off of a truce, right? From a geopolitical standpoint, we're not quite sure exactly where we're going to stand day to day. There's obviously a lot still happening there. If we do see oil infrastructure targeted, if we see shipping lanes disrupted, that's when we could then see that spike in prices sort of go higher. Of course, you have that. Is it the Strait of Hormuz? Have I said that right? Probably
Yeah.
not. That is sort of the key risk, I think, isn't it? That if there's any sort of disruption there, because that's sort of like the key artery for sort of global oil supply, and it's a bit of a strategic corridor as well. So I think, again, it's one of them where, you buy the rumor, sell the news? Yeah. Because ultimately we kind of had this rumor of, we might get oil shut down, but ultimately it didn't affect oil flows at all, really, did it? We continue to see oil flowing through, and oil prices are now lower. So the threat obviously did rattle markets, but ultimately I think that didn't really come to fruition. And as I say, I think what we're seeing from an uncertainty perspective is the new normal for markets.
Yeah, and it's a very good point about the headlines, and it's annoying that sensationality sort of sells, really, doesn't it? And people love those comments, and you see it all the time, whether it be about oil or it be about the Nasdaq's about to drop 50%, and it's got like 5,000 likes, and it's got what you on about? And you see it with Bitcoin all the time. Bitcoin's about to go into this phase where it's going to drop to 33,000, and everyone's liking it and commenting. And I just think, like, that these are big accounts. I go on them and I see like 230,000 followers, and I sometimes I just want to quote tweet them and be like, in what world has this guy got this amount of followers? Because it's just crazy. But people unfortunately buy into it, and I agree. I was seeing the headlines about oil, and I was like, surely people don't genuinely believe this. But it's easy to type something out and not actually take that action yourself, and have no position in oil. And I think, unfortunately, that's what a lot of these people are doing. We did a webinar on Monday for our Diamond Club members, Lale and I did a poll where I asked, and this would have been about 2 p.m. London time. So markets had recovered a little bit, in fairness, but I did a poll and said, where do people see oil peaking? And in fairness to the group, there was, I think there must be about 250 people in there. Only a very, very small amount saw oil going above $90. So I think, that I was going to call them the smart money. People that know a thing or two generally didn't think it was going to, spike higher. Not to say it can't do, but their base case was that it wasn't going to do so.
Yeah. And I think that, like you say, I think the frustrating thing, especially from our view, right, and I think we do so much from an education perspective to try and help, people. And I think you're in a position of power. When you're in that position of power, to abuse it and to, have such a large following and then to almost scaremonger, it's just not great. It's just not what you need in markets, especially when we have so many more retail investors coming in. So I think that then, especially when we look at oil, what advice do you then have for anyone that I think is looking to trade oil at the moment?
Well, the first thing I say, if you don't trade oil, you don't need to. Just don't be a moth drawn to a flame and be like, I need to get involved in this. And if you do have that feeling, you've got SIM accounts, you've got virtual accounts where you can try it out to see how you actually, get on. Because it isn't for everyone. It is a volatile product. And actually, I think one thing that a lot of newer to semi-experienced traders struggle with is when a market that they trade increases in volatility, they don't size down. So they go in with their usual size, but the ranges are much bigger. So they either get stopped out very quickly, or there's even a little bit of slippage in that. So you need to take that into account. Look at sort of the average true range of the last few days and adjust. Make your stops a little bit bigger, but that means sizing down, not have bigger losses. So the losses and winners should, in theory, be exactly the same. And it's understanding that risk. It's having a plan before you get in. Where am I going to enter? Where am I going to exit if it goes wrong? Where am I going to exit if it goes to plan? And having that plan, sticking to it. But, do remember, you don't need to trade these situations. I think that's an important thing to say. I mean, I look at the chart now and it's bang on a massively important level, $65, which is, you go about go back through the last 2-3 years, it's a real key inflection point, whether it be support or resistance. And we've now come back to test that as support. And we've actually had a little bit of a bounce from there. So $64, a great line in the sand for oil. There's a trend line from the recent highs that we've been talking about and posted online, and that held. We spiked above it, but it moved back down. So false breakout there, and we're back down to $65. So anyone who's sold the false breakout back down to their target, it would be now. So bit of a bounce here, I'd say, unless any new headlines. But keep an eye on your levels and be patient as well for the trade that you want. You don't need to chase these markets. The market, certainly oil, will be moving today and tomorrow and in 6 months and in a year's time. I mentioned earlier that when I do the daily voice, it's quite interesting to see it as a guide of sentiment. And I see if oil's down big, I'd be like, well, okay, in theory the ASX 200 should be relatively moving in correlation with that, with the sort of the exposure to oil and energy stocks. But whatever markets you think are worth sort of keeping an eye on, I know you mentioned gold as well, just from a safe haven situation. But in relation to oil, what are you keeping an eye on? But also, I guess, with oil, if it does spike, we got to keep an eye on inflation as well, don't we?
Yeah. I think that's probably one of the biggest points, I think, coming from oil. I think especially for traders, really, like I think, or more so from a fundamental perspective, I don't think this is more of a worry, when you're looking at anything from an equity perspective. But the biggest worry here is, okay, does this feed into inflation? Does that then change the rate outlook? Once again, we already know that the Fed is pushing back pretty significantly. I mean, locally today in Australia, we just had a much cooler inflation print than expected. Expectations were 2.4%. We got 2.1% headline. But that's probably going to push a rate cut into next month. So I think that, yes, if that inflation does come through oil, one of the big reasons that we've seen inflation fall locally is because oil prices have come down, and your gasoline prices, etc., have come down pretty significantly. Again, amongst other things like electricity prices, rental prices as well. So, I think services really have come down quite significantly. But yeah, I think from oil, the worry for investors will be that feed through into inflation. And I think that you're also, starting to see those supply cuts from OPEC being pulled back as well. So we're going to see, more supply coming to market as well, which is obviously going to put a bit of pressure on oil prices. So look, I don't think we're going to get to those sort of prices that we mentioned at the top there, right? People saying 110, 120. I think we sort of stay pretty range bound around here, particularly in the short term, if geopolitical tensions sort of do bubble up. But I think, as we saw it on Monday, it's going to struggle to hold on to gains until we sort of see really any impact on supply in the short term. But yeah, you're absolutely right. The ASX 200 has a pretty large energy sector, pretty big exposure to some oil names as well. So it's certainly a good read on the start of the market day, when you're sort of getting a look at sentiment. It's quite nice to get a read, and we usually get the biggest fallout, I guess, as things unwind. So.
Yeah, worth keeping an eye on there for sure for oil. But yeah, everyone keep an ear to the ground. It's going to be a headline-driven market at the moment, and I guess from a sort of CPI point of view, which tracks in a way recently the sort of the oil price. If oil price is significantly higher, you'd expect CPI to be higher, and it's been down recently, so inflation is cooling a little bit. But you would need that to be higher for longer, really, for oil, and it's just not doing that at the moment. But headlines can change things for sure. I was looking at my watch list this morning, which I have on eToro, which is basically a list of stocks I either own or are very close to doing so. And it's about 15 stocks. Every single one of them yesterday was green, which or this morning was green. You don't get that often, and so it shows it was a good day in the market for risk. I think Nasdaq closed at an all-time high. Then S&P is 1% away. You got a golden cross about to form on equity markets, or already formed, and it was one of those days where things look good. And one of the stocks that was on my watch list at the moment, just to keep an eye on it because it's really near a super interesting level, is LVMH. I think it's one that I'm seeing more people talk about. And I think the question is for people: is there a little bit of value there? Are you seeing a few people talk a little bit about it?
Yeah, and I think it's one of those stocks that you can't really go past, right?
Mm,
Some of the biggest brands in the world, obviously Louis Vuitton, Moet Hennessy, Tag Heuer, Tiffany, Christian Dior, etc. Right, some of the biggest names out there. But again, the luxury market is coming under a fair bit of pressure.
mm.
What's it saying from a chart perspective, though? I saw you did a Trader Talks on it yesterday.
Yeah, no, I did. I thought it was really interesting just where it was trading. And before I went into the chart, okay, well, let's have a quick look at what it's doing over the year. Down 37%, down 28% over the last 6 months, and over the month it's down, or last month it's down 6%, and then a week and a day it's just sort of flattening out. But I mean, obviously, people can go to the YouTube to check it out. But you've basically got a really key area of support, which happened to be the January 2020 high. We'd never retested it after we broke through and went to then the all-time high. So that level is about 438. The all-time high is 907. So, you'd be looking at a move back to, if we are to get back to those all-time highs, is 100%. So it's a real key inflection point. The whole move down has been nice, been technical, levels have been respected. So I'd imagine a lot of people who are short will be eyeing this area up as a place to take some profit. I'd imagine dip buyers or people that want a dollar cost average are eyeing this level as a point where it could be where they look to enter. So it feels very significant. Whether that holds or not, we obviously have to wait and see. But certainly from a technical point of view, we're getting very close to a level where I think a lot of traders be looking at. And look, I mean, reasons why we've been low, you keep it very simple. You've got weakening China demand, which seems like a very common excuse for companies, doesn't it, at the moment? You've got tariff concerns, another common excuse over the last few months. The end of that post-pandemic boom, which we had for a lot of luxury brands and just fashion brands in general, inflationary pressures, currency pressures as well. And as you mentioned, that broader luxury market has struggled a touch too. The luxury smart portfolio on eToro is down year to date, but has had a really good sort of last couple of years, and was down 2022 as most markets were, but that sort of 2020, 2021 were phenomenal years. So it's not been without good times, but it's struggling a little bit at the moment. I did a poll on eToro, just basically talking about the chart, but also getting people to answer whether they see it as a good opportunity, whether they think it goes lower, or they actually have no idea at all. 44% see opportunity, 29% think it goes lower, and 26% are just really unsure. But how are you seeing it at the moment? Anything you would sort of add to those reasons, maybe?
Yeah, I mean, look, this is arguably one of the biggest tests, I think, for LVMH in recent history, especially if you look at, the chart over that 10-year period. It's, the
Yeah.
sell-off is significant. I think the big question here for investors is, okay, is this a Netflix type sell-off?
Yeah.
Where, we've seen some weakness for various reasons, but then they have what it takes to be able to turn it around? Or is this a Nike type sell-off, right? Where you're constantly under pressure. You've really not been able to, make this turnaround story stick. And maybe it is the latter. Maybe it is, a bit more in that sort of consumer area. I mean, they're both consumer, brands, right? So
Yeah.
I don't know. It's a real tough one to call. I think what makes LVMH unique is that sort of breadth of its portfolio: fashion, cosmetics, jewelry, wine, spirits, retail. They own hotels. They even own a yacht making company, which I didn't realize. They make yachts as well.
Wow.
And so really that diversification should really provide resilience because you're spread across categories. But right now it's almost like a double-edged sword, because you've got softness pretty much hitting almost every corner of the market, especially when it comes to luxury, right? So whether that's champagne, whether it's fashion, whatever, it's kind of that size of the brand is almost exposing this sort of broader set of challenges as well. And I think if we dive into maybe some of those bigger brands, right, and think about, what makes its money, you've got Christian Dior, which is a big contributor to the brand. You've got Louis Vuitton, which is the biggest brand in there as well. But with luxury fashion, or anything luxury, it comes down to what's hot and what's not. And I think that's a key consideration for investors, right? Well, I think we spoke a few times about brands on the podcast. I think you you've covered Burberry before and that struggle and that sort of turnaround story. And if we look at some of the sort of like the fashion indexes for Q1 and sort of what's hot and what's not, well, you've got Prada up there. You've got its sister brand, Miu Miu. They're dominating the rankings. So ultimately, that's sort of Gen Z. It's fashion-forward consumers. No LVMH brand is in the top 20 anywhere, and I think that's pretty big. That's not saying that LVMH or is falling out of fashion. But I think it does highlight how competitive, how trend sensitive fashion is, and how how much the market looks at trends, right? Consumers, we know they are fickle, particularly when it comes to fashion. So staying dominant really isn't easy. But I think that the thing that's probably going to stand out for investors is valuation. It's a dramatic reset. 2021 peak, LVMH trading at about 40 times forward earnings. Arguably, you could maybe say that was quite hard to sort of justify. But now that level is around about 19 times forward earnings. That's far below its long-term average, and that's below sort of the broader luxury sector. So I would say that's fundamentally pretty attractive. And I think it would stand out to most investors, especially for a business so broad, so successful, and as dominant in the luxury space as LVMH is. So look, I certainly think it's a comeback story worth keeping an eye on. Certainly at a level that I'm looking at now. It's a conversation we've had amongst analysts here at eToro, certainly one we're looking at. So I think, look, maybe it's a case of waiting for clearer catalysts before jumping in, because we've had 10 consecutive quarters of flat revenue growth. Revenue growth basically hasn't moved. The next quarter, earnings are essentially set to see a revenue decline in every single revenue category, which isn't great, but maybe we get better commentary. Maybe that's the catalyst to move us higher. But I think those are the long-term horizon. It could be a bit of a rare chance to own, a luxury business at a much more reasonable price.
Yeah, I think it's important to note that the next earnings report is key. And by the way, if it isn't great and the forward guidance and the comments aren't great and it breaks this key technical level, it could do a Nike and just keep going. Nike has been near some very historical levels and hasn't really bounced that much. So it could well be something like that. I do wonder whether it's got a little bit of a conglomerate discount where, the market sort of doesn't take into account all the individual market caps of those companies, because there's some massive names that you mentioned there. But I know the question that all our listeners are wanting to know. Josh, do you have any? Are you an LVMH? Have you got a bit of Louis Vuitton in your wardrobe?
I actually have a bottle of Moet on my desk at the moment.
That
was celebrating me doing 5 years at eToro, so that's well deserved, I think. But no, I don't really own anything too luxury, to be honest. I'm not much of a luxury guy. Whereas Sam, I reckon you might have a few little bits.
Well, do you know what I mean? When I was younger, I'd be a sucker for a brand, and that. Looking back, I'm thinking like I spent that on that, and now get me in COS or Reese or Zara, that can do the trick for me. To be fair, but it's well. First of all, congratulations on 5 years. Mine will be next May, but it'll be interesting to see that next report from LVMH. Let us know as well, by the way, in the chat, whether you agree, disagree, think there's value there or not, value trap maybe. But we will discuss that in the future. Maybe the next one will be in July. We'll have to get those first half of the year predictions out and have a look to see how we've done. I don't think, Josh, we'd have predicted just how mental the first 6 months would have been, would we?
No, I think if we got anywhere close to it, if anyone's listening to this, I think we deserve a pay rise, because that's some genie kind of stuff right there. So
yeah, mental 6 months. But on that note, we'll wrap it up. Josh, as always, cheers, mate.
It's been a pleasure. See you guys next time.